Hey traders, Nick Shaheen here looking at Caterpillar. I haven't traded in a while. It bit me a couple of times, so when a stock beats me, I walk away from it. It just ticked me off. So I know how to trade it. I just choose not to. And I do have an opinion here. So I just saw on Cramer, CNBC, he kind of said that people should sell it into the upgrade from Goldman Sachs, I think. So I agree with him that it's not an entry point, whether you want to sell it or not. I'm not recommending any of that here. I'm just sharing the levels that matter, but for different reasons. I tend to not listen to the quote experts out there because their upgrades and downgrades and recommendations and price targets make absolutely no sense. I mean, you see downgrades sometimes and the price target is like 20% above where it's at. So how can be a downgrade? So anyway, it's a crazy system. People know how to use it. I certainly don't because it does not make logical sense. The English they use is not the English we speak. That's for sure. They say, well, this means hold. Well, why don't you say hold? Or this means sell. Why don't you say sell? And this means buy. Why don't you say buy? So anyway, back to the point. This is a daily chart. It's as simple as it gets. Caterpillar. A lot of lines that I can take all the lines out. We'll put them back in later. So on the way down to here, it's not an obvious place to panic out of it. I don't care what the headlines are. It's not, well, here there was an earnings report. I don't know which one of these two candles, but it's not a time to sell. For the same reason, it's time to not buy here. And I'll share that, and I'll tell you where are the action lines for me. So on the way down, this is not a place to sell because it fell into the point of control. This orange line here, this is where most of the buying and selling happened for the last year. About a year's worth of data in front of us. So most of the selling happened here. So logic implies that if it's falling into it, they're going to get active at it again. So the whole zone is supportive. It's not a hard line in the sand. It's like a rubber band. You know, they call it mattress. I think rubber band is a better description. Sometimes mattresses sink and they don't bounce. So a rubber band. So it's not a time to panic. Plus, if you look at the eyeball of this rally here, this is about half of it. So, you know, you've heard of Fibonacci, right? 50% retracement is not a deal breaker for a rallies, and it's definitely not a stepping off. You know, I would either put a tighter bolting stop loss zone here or here, but not down here. But that's personal preference. On the way up, the reason why I don't start it here, because this is where the bots will come in and start selling it. This point is about 50% of this dip, right? It recovered half of it. It fell this much and recovered half. This is where they start saying, so whoever bought the dip, this is where they start booking or locking in. For another reason is A, it filled the gap, and B, it is look how meaningful this line is. Let's see if I can explain that with some crayons. A trusty crayon. Okay, so right here, right? Zone, pivot, look, support, right? They call it support. And that was breakout, same line. Look back, big resistance, right? And I'm sure it goes further. I'll zoom out after this is done. So resistance, so fail, basically, you can call it here. Came back to it, boom, burst through it, confirmed support. This should have fed a rally that went like this. Some reason when we zoom out to a weekly chart, maybe we'll know why it failed here. So they came back to here. It didn't even hold as support, straight through like butter. That shouldn't have happened. And now they're back at it. So to the untrained eye, I'm not a technician, but I sure do know what I'm talking about when it comes to these simple patterns here. So this tells me that there might be something else going on here, maybe some sort of a, you know, this kind of a deal. I'm not sure, but it's definitely not an entry point when it comes back to the fail point, because you've heard it before in plain simple English. Prior support becomes forward resistance and vice versa. This is the case. So this was a support barely, and then now is it resistance with a question mark? It was resistance before. Man, that scribble is horrible. It's the end of the day. I'm tired. I'm sorry. So that's the reason why I would concur with Cramer, as in only to the point is like upgrade. No, I'm not buying it until they prove they can take it out. I'll even see if they can take out this ledge here. That's probably even more important. You figure out what these values are. So that's my take on this daily chart. This is 1 year's worth of data. So sometimes when I can't get any information from this, or I need more information, like to see where that line goes before, I go to a weekly. So this is where you can tell it's stuck in a long consolidation. This is 5 years worth of data. So 2017, well, you can call it, yeah, September 2017 set a base and a roof. So here it is, right? If you look at it, right in the middle of this zone. Support. So look how far back this zone, I told you it goes further back. This same line, the same where it's at right now, it's that green line. When is that? October of 2017. Boom, they hit it. They didn't take long, busted right through. Support, support. You can call it support. It held, they fell below, but at least they recovered it. And then finally gave it away. When was that? October, of course, the Christmas crash of 2018. The whole market fell, so it's not, sentiment was terrible. China, blah, blah, and Caterpillar's right in the face of that. Nice bottom, bounced, could not break out, could not break out, could not break out, could not break out. Finally, they broke out, barely held it one time, and then back below it. So you can argue that maybe it's doing this kind of thing here. I'm sure somebody can come out with a 5-3 Elliott wave pattern that calls me an idiot, but I'm calling it as I see it. This line has meaning way back. It's never butter. When it has meaning way back, they don't just slice through it usually. They take 1 or 2 tries at it. So if I were Goldman Sachs fan or follower or client, I would probably say, okay, thanks for the recommendation, but let's see what it does with this area here. 140 to 142 and a half, 143. It was a big ledge not too long ago. Let's see if they can take it out and hold it before they can. And I'll ask the same at 148. In fact, if it gets to 148, I'd probably try to short it. That's personally, with a tight stop, because resistance is also a potential catalyst once they take it out. Okay, back to a weekly. I forgot to look at something. Okay, so if I were a momentum trader that liked to take swing trades, breaking above this and holding it would bring a new high, all-time high, potentially. Nice higher lows, attacking a neckline. Once they take the neckline out, they overshoot higher. Okay, a moment of truth here. Let me put back the drawings that I drew. I don't look at this often. So, all right, descending channel, long-term, weekly. They tried to break out of it. They're still arguing about it. This blue line kind of fits 141, 142. I drew it way back then, so also shows the potential of the upside move. It hasn't materialized yet. So they're still arguing about it. So I didn't say anything wrong. Red zone down below, nice support from a long time ago. The breakout from here, okay, how about that? Let's go to monthly chart. Boom. Okay, now new information. This looks like it could have, it supports the fact that this trigger could have legs. So I just put that orange trigger, right? It's a slow trigger. This is a monthly chart. Every candle is 1 month. So it goes back to 2006 here. So if somebody believes in 3 pushes, the third one should take it out to new highs. But I don't chase it from now. I'd rather miss out on some upside. Or if I'm dying to do it, maybe I'll do it and just put a tight stop below it. But as a trade, it's better to wait for the confirmation, like this guy right here. Real clear breakout. And whoever followed it made a ton. And then look, it came back. And if somebody bought it here and they panicked out of it here, this is not the time to panic. They could have recovered some of their losses. So if not all of it. So this is the case with finding the levels that matter. And this red line, if I extended the box, I extended this way and that way, it's a visual break in the whole chart. And this is a long-term chart, monthly, slow moving. Okay, so these are my thoughts, and you don't need an expert to tell you what to do about it. And if you're a fast trader, you can go into smaller increments and find even more important lines on the smaller scale. So dips on this 2-hour chart, dips to 137-ish zone should find support. So if it falls here and I'm holding a long for a short-term trade, I don't bail out of it. And I would put an alert above here, because that could invite more buyers. Higher lows, knocking on a roof. If they break through it, they might overshoot higher. But it all depends on the speed. But then, they might get tired at 144. So I don't like to trade this fast. If I get a fast move, I bail out of it fast. But clearly, 148 is a place to exit, not start. Whoever is long here should probably exit here. I would, or at least lock in. So if I bought calls, I'll probably sell some diagonals against them to lock in some of the profits. So it all depends on time frame. So some people like to trade 5-minute charts. So there's a whole new set of information. So below 139.5, it's a sell down to the next level below, which is 139 and change. Where it should find some support around 138.5. So it all depends on what you're trading. So in this case, this candle is important. So I would mark 140.3. It was a point of indecision, some sort of a doji candle, and the middle of it is right there. And look how well it matches up. I kid you, I did not make this up. I just practiced this. Okay, so look at this point. Exactly in the middle of this doji. Coincidence? Maybe. Hey, how about that point? Coincidence again? How about this? It's not a coincidence. So somebody else thinks it's important. Also, it matches up the top here. So little hints you pick up off the charts that are important. Some candles stick out more than others. Tails are important. An immediate rejection, emphatic rejection this way or that way. Something like this, 2 big tails and a tight bunch in the middle is called a doji, is indecision. It's like they love it. No, wait, they hate it. No, wait, we have no clue. Let's just close it where it was. This is 5-minute candles, but it still counts. All right, Nick signing out.